I want to I want to talk a little bit here about, as we get into this, about investor dynamics. And the fact is, if you build a great investment grade business, the ability to sell that asset will take care of itself, right? So you can have more control over the timing of when to do that. In the same way, when you invest in the stock market, you're investing your personal capital into your business every day. Andy Limes, the founder of SDR, is very fond of saying, every day that you're not selling your business, you're buying your business. So every day you wake up and you get into the office or what have you, that's an opportunity to invest in your business. So let's talk a little bit about investment dynamics. You probably know that businesses, when they do transact, are typically purchased off a multiple of earnings. In some cases, maybe a multiple of revenue. For instance, a business with 2 million of EBITDA or earnings might trade for 6 times earnings or $12 million. And the interesting thing is, as I get to see so many different businesses every day, you could see two businesses that look exactly the same on the surface. They're in the same industry, same financial profile, same services, right? But they'll trade actually at very different multiples. Well, why is that? And the devil is in the detail, but we'll look at that in just a minute. But it really has to do with whether or not you've built an investment grade business. Private equity groups report paying 18% plus more for grade A businesses than an average business. In fact, the gap in valuations between a grade A asset, a grade A business, and that of a grade B business or lower is actually increasing in terms of valuation. In a market like today's, that's, I would call, relatively bearish, investors really focus on making sure bets. And so in an environment like today's, that means their risk appetite actually decreases. And as a result, what happens is what we call the flight to quality. Okay. It means that they're really more focused on buying those businesses that really feel like they're kind of a sure thing as an investment. The other reality is that there's just a dearth of quality grade A businesses to invest in. And so that scarcity of those highest quality businesses, just creates a frothy market for those companies. And if you don't have a grade A business, what we're seeing is that with interest rates now much higher, right? Even though the Fed came down a little bit recently, interest rates are still much higher than they've been, in the last 10 to 15 years. And so those lower quality businesses may have trouble getting any financing at all. The credit markets are a little bit soft. And yet at the same time, those grade A businesses are getting those really high, strong valuations, and it's as competitive as ever.